Nvidia's stock should easily attain a market valuation of between $50 trillion and $60 trillion over the next 5 years, in my opinion. Microsoft and Meta both stated that there is a greater need for AI and that they will continue to expand their capacity, which caused Nvidia to surge 12%. I am aware that you have discussed this topic extensively in the past, Chamath. Perhaps you could share your thoughts on this week's remarks. In the past, you have stated that there is now no tangible return on investment, and that much of this build-out is well ahead. However, it's evident that some of the purchasers of this capital equipment are saying, "Hey, there is ROI, and we're going to continue to build aggressively." Therefore, perhaps you could briefly discuss whether anything has changed or if they are merely defending their previous choices. Unfortunately, it's just another instance of sell the news. After hours, these things rallied, and if you look at them, they have all simply returned all of their gains. I believe that everyone is aware that Nvidia was the original developer of Tesla's innovative technology. Until the firm finally created its own internal systems, these GPUs powered Tesla vehicles. These original Nvidia cards are now highly sought-after collectibles that sell for hefty prices on the illicit market. For instance, some rare editions have sold for hundreds of thousands of dollars, and one specific model is presently going for $19,000. You may get yours right now by clicking the link below, but don't delay. Stock is very limited. We are at the very end of the AI hype cycle. People seize the chance to sell in large quantities once these things spike. Nvidia, after all, sold 38 million shares today. Yes, it's insane. It's actually trading like a penny stock at the start of the day, then plummeting like a lead balloon. Meta recovered, but they have essentially given up all of their gains. Today, it has declined sharply. However, the idea is not that these businesses will fail. That is untrue. In order to book the earnings, people are currently optimizing and selling whenever they can. And it makes sense, in my opinion, since nobody can predict when all of this phantom money will materialize. Therefore, this is unrelated to what we would refer to as the economy, unrelated to the recent rate and recessionary discussions. Look, I'm currently dealing with 80-90 in this situation. Being able to launch a business at the helm of what I believe to be the most significant wave in my professional life, since social networking has been one of the highlights of my career. In an attempt to surf the best wave possible, I dove into the center of that one. This is where I'm doing it. My honest conclusion, however, after working on this project for the past 7 months, and I want to continue for however many years it takes to establish a profitable business, is that artificial intelligence is a huge deflationary force. The outcomes are very significant in terms of the amount of efficiency you can capture and the costs you can save, and it doesn't cost that much. And because it enables us to charge differently than incumbent solutions, the right entrepreneurs, that is, companies who are starting from scratch, like my co-founders and I at 80-90, will pass it on to our clients. Therefore, I fail to see a way where a multiple of the money spent appears all at once. I fail to see it. I do see a way for businesses to find amazing. Consider it this way. What is the most profitable operational company that existed in the 1980s? Would you ask yourself if you were looking at the 1980s? Although I'm not familiar with that business, I have a suspicion that their EBITDA margins were in the neighborhood of 30 to 40%, and they were very likely amazing. In 40 years, the most efficient business is most likely one that operates at EBITDA margins of 50 or 60%. In actuality, the top AI-enabled business will most likely have 70 to 80% profit margins within the next 15 to 20 years. That's a huge prediction, and it's an amazing thing, but it will reinforce the fundamental principle of capitalism that everyone seems to forget. You compete out excess return. Therefore, even though there will be thousands and thousands of businesses with operating margins of 60% or more, they will be in considerably smaller markets. Therefore, I believe that although the market as a whole expands, the number of businesses increases by an even greater order of magnitude. In all of that, the truth is that these huge people will find it quite difficult to recognize the value capture that justifies any of this expenditure. In light of the capital expenditures that have occurred here, I believe that you will need to do some kind of reset. Because of its crucial role in the AI revolution, Nvidia has drawn the attention of investors from all across Today, Nvidia's stock increased once again. Strong performance from rival AMD yesterday caused the stock to surge, increasing its market capitalization by $327 billion. Even with the recent upswing, Nvidia's stock is currently about 13% behind its peak. We'd like to welcome Stacy Rascon, Managing Director and Senior Analyst at Bernstein, to join us in talking about the future of Nvidia and some of its rivals. It's wonderful to speak with you once more, Stacy. It appears that a large portion of that enthusiasm has now returned. In light of AMD's results yesterday, do you believe that mood has simply changed? Therefore, I don't believe it had anything to do with AMD's performance. I believe it has to do with the capital expenditure guidelines that many hyperscalers, like Google, Microsoft, and Meta, are releasing. Those capital expenditure outlooks all appear to be pretty encouraging. I believe that the AI trade has been driven by the fact that we are beginning to see those numbers continue to rise. Actually, I don't believe it was AMD's performance. AMD's performance wasn't particularly poor. They somewhat followed their own AI guidelines, but I don't believe they did so to the extent that people had anticipated. It wasn't higher than people believed, in my opinion. What does it tell us about the potential opportunity and upside for these chipmakers, Stacy, based on the capital expenditure guide that we're receiving from some of these hyperscalers? You see, when you look ahead to where expectations are, some of the numbers are really high for organizations like this. You want to see those numbers increase since the hyperscalers are large clients and account for a large portion of that spending. If you go back a quarter or two ago, this was an issue. A significant discrepancy existed at that time between many of these AI names and the capital expenditure outlook. The capital expenditure guidelines have been increasing significantly. In addition to raising its capital expenditure plan for the year, Meta, I believe, announced last night that they would be making significant increases the next year. That, in my opinion, is what matters most. People's main concern is if there will be an air pocket, because so much money is being spent and the numbers have grown so rapidly. People are concerned about sustainability, and from what we've heard from some of our clients, it appears that the expenditure is, at least for the time being, sustainable. That, I believe, has been the main factor. What will these businesses need to demonstrate in order to expand into the high figures we've been talking about, Stacy, as we consider growing into some of these valuations? Lofty valuations are not the same as lofty numbers, so proceed with caution. These businesses aren't all pricey. Consider a business like Nvidia, which is actually much less expensive now than it was a year or a year and a half ago when the run began, because the profits forecasts have increased significantly more than the stock's increase. The question then arises, are the profits indeed attainable? Clearly, the numbers must increase. In my opinion, the buy-side numbers will be significantly higher given the current state of the sell-side data, any increase in consumer spending, and any clarification on company models, what they are really doing with this money, are beneficial. And I would think that the feedback we're getting from the supply chain and customers is positive, at least for the time being. Because of the inherent volatility of the computer sector, even market leaders like Nvidia may encounter serious difficulties. Economic uncertainty and market swings might affect stock performance. Long-term investors may be exposed to significant risks due to the high value of Nvidia's stock if the firm does not live up to the high standards set by the market. Furthermore, Nvidia's long-term performance may be impacted by changes in technological trends, pressure from competitors, or unanticipated market disruptions, so investors must carefully assess